Hey everybody, it's Brett. Just with a quick market update. It's been a little while. The market's been mostly slow and going sideways, but let's unpack a few things. And if you haven't seen already, TradingView has their own version of the market heat map. You don't see Bitcoin or Ethereum here because I've turned off the gray ones, which basically mean they haven't moved more than 1%. So a lot of nothing going on in the markets here other than XRP down a little bit. Dogecoin up a little bit. We're not going to talk about those, but I wanted to show you this cool tool. Before we dive into the charts, though, this is something else that you guys might have on your mind with all of the regulation that's been coming and these offshore exchanges, basically the SEC cracking down on these and KYC. There may be a way to get around this if you'd like to trade on something like KuCoin and still get past the KYC. This is something that came my way, is no way an endorsement or recommendation by me, but I thought it was interesting because we've been talking about digital residencies lately in some of our programs. So digital residency in Palau has come up, and there are other countries like Liberland that isn't a real country yet, but it has some interesting implications. So the Palau is apparently an area where you can get digital citizenship. You could look this up online, and there's also an article about Estonia, which claims to be first, where they launched e-residency back in 2014 and have had 100,000 people or so sign up from around 180 countries around the world. And allegedly, ostensibly, you could use this to get past or still satisfy rather your KYC in other countries. So I thought that was interesting. Palau and Estonia throwing their hats in the rings for digital residency so that you could apparently get an identification card. Here's one through RNS for Palau. I have no affiliation with these companies, just thought it was interesting, and I would share that with you guys. Okay, diving right in, let's take a look at the markets here. This is a chart I had put up on TradingView a couple weeks ago, actually. It was back in June, so it was last month, and so I thought we would bounce out of this liquidity zone here around 25.5, 25.3, and we did. Wasn't sure if we'd break above that neckline, so this is you can find this on TradingView on so you just hit play, and so these are charts that you can't change them after the fact. So what we're seeing is a rejection at that 30,000 level, which we tried to get above 31K. I've been saying what we need is a close above 32,000, and then it's a nice rally, pretty quick run up to 45K to 50K, I believe. So again, this 31K, 32K giving trouble to Bitcoin. We'll keep an eye on that. Here's the monthly chart. I'll just expand this a little bit. Do you think we pull back here? We had this great bullish engulfing candle last month and pushed up again to that 31,800. So almost touched 32K, but strong resistance, which we can see back here as the support in May of 2022. And then in June of 2022 was that strong resistance. And so it's a really important level here because it was kind of resistance here, turned as support all the way back in February 21. Tested 3 times here in, let's see, this was May of 2021, June and July. July, of course, being that market midsummer bottom where we rallied off to go up to new highs. Many people think the real top was here, and this was just a Wyckoff up thrust after distribution, the UTAD pattern, if you're familiar with Wyckoff. And then, of course, we came down. I was telling people to get out in January, and certainly we had a nice big drop here. Our indicators call the bottom right here in January, by the way, this green arrow there. And so that we were hopeful that would continue on, and it did. However, again, this is that resistance level. So I do think we pull back probably into this 25,800 level. Could we go lower? It's possible, but I think the most likely scenario is we pull back here a little bit and then we push higher for another attempt at that $32,000 level. But this candle here currently playing out on the July monthly is a inverted hammer here, so that's a bearish signal. Certainly would make sense. We came up about 100% from the bottoms back in January, around 15,500 or so, doubled that up to 31K. So it would make sense to pull back, have some profit taking, and see some consolidation and some pullback here before heading higher. This Fibonacci I've got drawn here from the cycle low to the recent high could see pullback. If we were to see a 50% pullback, that's down to around the 24,000 level. And if we get down to the golden pocket there, then that would be a little bit farther down. I'll just extend it over. That could be down around this 21,500. Nobody wants to see us go back down there, but the deeper that we drop, the more of a trampoline effect will have on going higher, more than likely, barring world events. A big unknown right now. So we'll see lots of economic factors, China, Taiwan heating up, the whole Russian-Ukraine war, sort of old news, but still nobody knows what could happen. So we just have to kind of wait and see. Yeah, I'm a firm believer. Show me the charts. I'll tell you the news. And so we'll talk about the news recent weeks with XRP pushing the market higher, but could not hold. This chart here, I did want to point out, this is our trend strength indicator. So again, we were watching for a bounce back in January, came up here, and this was an unknown area, that 40% level. And so again, and up here. So we have broken above this downward trending trend line here on this indicator. So that's bullish, but a pullback to retest it, I think is warranted, and also our signal indicator, which is great when these things all align. So that's good news on the monthly chart here, just some traditional TA with the monthly MACD turning green for the first time in a while. The month isn't over yet, and certainly we've seen this in the past. So back in 2019, pushed up for about 6 months, dipped down sideways. It was kind of in a sideways territory for, I hate to say, all about a year, actually, just exactly a year before it really started pushing higher. So we hope that that's not the case, but probably looking at a choppy summer. And at least we're going green here. And that's very favorable and oversold. This is important crossover here. I'll point out. Because one of the reasons I was originally saying get out of these markets, I was telling people to get into cash back in September, October, November, but really pounding the table to get into cash, get out of the markets in January because of this cross on the monthly MACD, and then the fact that the histogram went from green to red. So we're seeing the opposite now, these lines turning higher on a bullish turn of red to green. So we'll see how that plays out. That's all we can really do is read the tea leaves here. This was a prediction that I had, the path to 100K Bitcoin in 2023. This is a fractal pattern from back in the 2020 when it pushed higher. So it's not exact, but it is possible. It's not looking that likely at this point if we see we've pulled back down instead of continuing to push higher. So it's a big unknown. Here's the actual chart. I did add one more possibility though, these ETFs like BlackRock and Fidelity, these 4 items that could push, not likely, but could push Bitcoin dramatically higher fast. The hyperinflation and de-dollarization of the dollar and the BRICS nations. There's some concern or commentary that India wants out of the BRICS nations. Not really sure what's going to happen there. QE money printing to pay down the debt. We sort of did that. We kind of kicked the ball down the field and sort of delayed the debt ceiling till into the next administration. So we'll see. That's not a real factor right now. Bank failures, bank runs, transfers into BTC. We haven't seen more bank failures. So that these are all sort of still in the wings, but probably we're past that. It remains to be seen if there's a commercial or a residential real estate bubble shoe to drop. But again, the BlackRock, Fidelity ETFs, and the 6 others, or the 6 others, including Fidelity, that have thrown their hat in the ring, any one of which could lead to serious adoption, mass influx of capital, both institutional and from private markets. So we'll see what happens. I just want to lay out the possibilities. Here is Bitcoin on a weekly basis. Here's a little fractal pattern here, which played out all the way back here. I believe it was this one. So as we came out of this COVID crash, this was the fractal pattern that I was sort of wondering if this is what we're seeing right now. So if that's the case, we'll hold this bull market support band, which is the 21-day EMA and then a 20 SMA. But you can see that that pattern looks very similar. So we can hold here, which would be great, and start to push higher. Then I think we do start to push higher and break above that 32K range, which would be amazing. Probably in September, August, probably a slow month. The big Wall Street traders are off in the Hamptons, and we see that year after year. I've been doing this 20 years, so markets are kind of quiet in August usually. What we don't want to see is a break below this bull market support band. So I'll just widen that a bit. If we break below the bull market support band, probably going to spend about 8 to 12 weeks below that, and could come back down in this $23,000 range, which is that rising trend line that's held 3 times before. So in that scenario, we might see something like this, where we push higher with that. Let me get rid of this one here. And as we know, all things are possible. Some people are saying a crash is incoming, will come back down and retest the lows, or Bitcoin 10,000. I don't think that's going to happen. It's not what I'm seeing in the charts. at this point, but we have to remain cautious and see what happens. So let's see. Here's a little gem here I won't go into, but there's a lot of these charts and these AI coins had a great run earlier this year, 100%, 200%. Here's one ALI that we like. This was a 10x from January and December into January, February. So it's pulled back, a nice support zone. Not a recommendation to buy, although we are watching this closely in some of our other groups here. But at any rate, want to see these things kind of circle back and head higher. All red on our radar, though, not looking good. Let's dive over to Bitcoin on the daily basis. Have a lower highs. So this is a bit of a wedge pattern here forming. So we've got this here. We need to see it break back above, again, this 30,000, 32,000, see us go higher. But all green on the radar. So I like that. That's one of our indicators. This radar here, and then the TSI going from red to green would be great, but just not really seeing much of anything happening. So we're in a waiting game, barely up to 0.26% on Bitcoin, just holding this wedge. It's either going to roll and go higher or break down. It has to go one way or the other. Let's take a look at ETH. And ETH is holding above its 2150-day EMA. Did have, I guess I'll get rid of this arrow here, but did kind of forecast we'd head higher out of this liquidity zone down there. So a big question mark, I want to see it hold this 21 end of the 50-day EMA at least. And keep an eye on that. This head and shoulders pattern that I was concerned about breaking or following through didn't really play out. So that's good. Can probably remove that from the charts there. And, I think it's interesting that get rid of this liquidity zone. We're still in an uptrend. If we take this trend line there, despite this drop right there, still in an uptrend. However, these things, and it really has to break back above 2,200 to gain that momentum back. All right, let's take a look at Bitcoin dominance. Bitcoin dominance has been pulling back a bit here. I think that we could see a deeper kind of pullback and then push higher. Let me get rid of these. I think I drew these in a different time frame, but let's zoom out a little bit. Bitcoin dominance came right up to that 52% level, which it has in the past. And that's a significant zone here. If we go back to March of 19, where it bounced off the 52% level and went higher, now it's rejecting, but is still in an upward trending channel. So Bitcoin dominance could certainly see a pushback higher in a couple of weeks. And then as we know, going into the bull market, it can drive even higher up in the 58, 68% levels, as we saw back in the end of 2019 and into 2020, where the money started to flow out of Bitcoin into the alts, and we saw the whole market rally. So if you're not familiar with Bitcoin dominance, just means the kind of percentage of overall capital going into Bitcoin. So leading into these bull markets, it pushes higher. So it's good that it got back above the 48%, rejecting at 52% in an uptrend. We'll have to keep an eye on that. But once we're in this sort of Goldilocks zone here, I guess we can call it, then the bull market should be back in earnest and heading higher. So with that, let's take a quick look at ETH dominance, which has just been going sideways here, really kind of disappointing. Thought ETH might lead this overall market rally. Let's expand this a bit here. So if we go back out a bit on this chevron, ETH dominance dropping all the way down into 2021, and then started to, when the market started to rally, as Bitcoin dominance was going lower, money was flowing from Bitcoin into ETH, had this nice upward trending channel. But I keep redrawing this. I just hate to keep widening it. I guess technically it's still in this channel, but it's been going sideways since April 2021. So it's almost over 2 years on ETH dominance. So we'll see what happens. Not much more to see here. And let's see, what else can we look at? Going back to a daily chart, let's look at the overall total market cap. So total market cap is, I'll widen this up a bit. Also, it's holding above $1 trillion. Very important when that happens. Had this nice upward trending channel, which is no longer intact. I hate to widen this channel. I guess it's still in a new upward trend channel. Okay, so in contrast to where it's been going down since the market top right at $3 trillion. And these round numbers really so important. $2 trillion right in here. It overshot it a bit, but 2 trillion was the market top here, this local top. And then we came down below $1 trillion. So we're back above $1 trillion. It's very important we hold there. And so I've got alerts set just below but technically still in this upward trending channel, which is overall bullish. This this typically the opposite of this is bullish, a rounding bottoming pattern, right? So if we did that, we'd be bullish. This is bearish. I'm going to take this off because well, it is a little bit concerning actually that we're seeing potentially a head and shoulders here if we wanted to do a quick and dirty look at it. So left shoulder, the head, and then the right shoulder. So we hope that doesn't play out. Right now, I'm still watching the upward trend channel to see if that holds, and we'll know soon enough. Okay, so anything else we want to look at? Not a whole lot else going on. You know, there's Binance and AVAX, all these in downtrends. These look almost identical. Many of the coins, almost all the coins are in a downtrend, and not much to see there in light of that. So if I wanted to hop over, just see if there's anything else that I like. You know, just a quiet, low volume day, nothing really moving. So we can put that away. I think maybe let's do this, jump into and check out some Bitcoin news. Let's see there and there, and then we'll wrap it up for today. But let's see, any news on, my news is not showing up here. It's not working for some reason. Oh, because I'm trying to draw an indicator. Don't you love when that happens? Okay, so here, new crypto bill demands SEC and CFTC to draft rules for trading platforms. That should be good news. Certainly regulatory oversight into some of these exchange platforms, especially ones that are located outside the US. Questionable practices for sure, the FTX model, and the early on, Arthur Hayes and BitMEX was accused of liquidating their own customers and targeting liquidations as part of their business model. I think whether or not that's true, I think that's become part of the business model on these overseas exchanges. So be careful. Another news item, there's literally zero difference between Doge and Litecoin, says, I don't know that that's relevant. There's a huge difference. Litecoin is a hard fork of Bitcoin and has a halving coming up, so it's limited quantity, whereas Dogecoin sort of has a limitation. But anyway, I'm not a big Doge fan. BlackRock ETF will be a big rubber yes stamp for Bitcoin. Yeah, so this is bullish. Here we go. Cointelegraph putting out great news lately. BlackRock ETF will be a big rubber stamp. Yes, for Bitcoin. Interview with Charles Edwards. So essentially, we all know that as soon as that's approved, assuming it will be, huge volumes will be pouring into Bitcoin. And the difference is, if you're saying, well, didn't we already get an ETF? Well, we had the futures ETF that came out in 2021, but that was kind of the market top right around then, because as we know, futures are cash settled, not Bitcoin settled. So it did not equate to large amounts of Bitcoin getting purchased. And in this case, a ETF here, true ETF, would allow and sort of coincide with, buying more Bitcoin by institutions and a lot of these bigger companies like JP Morgan then and Fidelity being able to say to their wealthy clients, say, hey, it's time to buy Bitcoin, and lucky you, it's now regulated. You can buy it through us so we can make money from you. That's how this is going to go, you guys. And so here, Bitcoin's correlation with risk assets and inverse correlation with the dollar strength, has been declining. I've noticed that. Let's take a look at the DXY because it has been and had been inverse relationship with the DXY. Where's my DXY chart? I usually remember I had that great DXY chart on, and the correlation has been lessening lately. I also saw that, and I was going to comment on that. So the inverse correlation with US dollar strength has been declining. What's the reason for this? Let's take a look at that. Bitcoin has historically spent most of its life uncorrelated with risk markets, oscillating positive, negative. It comes in waves. So that makes sense. Last cycle happened to see a very strong correlation with risk assets. This began with the Corona crash. Let's see, skimming all of this. Following that, wall of money entered the markets from one of the biggest quantitative easings of all time. In that regard, the following year was a one trade up and to the right for risk. Then in 2022, we saw the unwinding of all the risk assets, NASDAQ included, and all the tech stocks. Assets and bonds repriced following with the most aggressive rate hikes in history, which is also true. So it's been unusual times. That's the theme of the month here and the year. There's no intrinsic need for Bitcoin to continue to highly correlate with risk assets. It is unlikely with time that as Bitcoin becomes a multi-trillion-dollar asset. Yeah, well, we've been waiting for the decorrelation of that. And it's possible, it's happening right now. And in fact, as the dollar struggles, we could and should see more money flow into Bitcoin, because that is the use case of Bitcoin, and therefore the correlation should lessen. So I think that's all we want to unpack here for today. This article talks about regulatory pressure impacting Bitcoin crypto markets. I think it'll be a good thing in the long run, as long as it's positive, clear regulation, and hopefully Coinbase, now that XRP, I forgot to look at the XRP pump. Now that XRP has won at least a figurative victory against the SEC, I did say and forecast that both sides would claim some victory, and that was the case. But at least now Coinbase has a little more encouragement to go forward with their lawsuit against the SEC, because XRP prevailed and as being deemed not a security. So this is excellent news. And so this is pretty clear. Industry and government, where it matters, is in support of the asset class, and it's here to stay. And BlackRock ETFs have a 99.8% success rate, and its announcement to launch Bitcoin ETF was essentially regulatory, financially industry green light. So why aren't we seeing markets push higher here? There is some other news, with the Celsius finding $180 million worth of coins that they're now being approved to sell. They've been selling into these markets, and so that's likely why we're seeing some profit taking here. But once the selling pressure is gone, we should see things push higher, and that's a bullish sign. So real quick, just because I mentioned it, let's look at XRP and what happened there. That was certainly a sell the news type of event. I'm not seeing it in my watch list for some reason, so we'll just pull it up here. And let's pull it up on Binance. So here we had that huge pump on the news, and but I was telling people, get out. It's not, go to $1. That's about it. Why was that? Here's a tip for you guys: Bollinger Bands. Use the third standard deviation Bollinger Band, not the standards, 2 standard deviations. Whenever it gets above that third standard deviation, it always pulls back. I can't say always, but I'm going to say always. It has always been a highly probable sell signal. So right here, again, got out of the Bollinger Band, pulled back down, got out of the Bollinger Band, pulled back down. Again, this is the modified Bollinger Band. So if you are going to add your standard one, you just go into inputs and change the standard deviation from 2 to 3. I started playing around with that in 2021 and found that as volatile as crypto is, that is a much better baseline for crypto. Okay, so keep that in mind. But XRP, big pump, should go sideways for a bit. This was a Fibonacci retracement, pushed almost all the way up to the 2.618. So some retracement from here would be warranted, and at least until the 21-day EMA catches up, probably goes sideways for a while. Above $1, I think XRP really has another leg to run. Also read something about ADA this morning. I'm not a big ADA fan. The joke is stands for at $1 always. It's not even doing that well. So if you're a Cardano fans, don't mean any offense to you. It's a slow moving battleship. So the whales apparently are buying up some Cardano here at 31 cents. I'd like to see it above 50 cents as a sign of strength personally, and then come back and retest that. So I'll set an alert on that. But in terms of where this could go, certainly some selling pressure here in these order blocks here at 41 cents, 49 cents, so there's a lot of profit taking order sell blocks up in here. It does appear to be in a buy zone down here based on these order blocks. But those are not always accurate. There's an A book and a B book. This is the retail side. There are other order blocks that we can't see. So I think I exercise caution overall, and we'll wait and see what happens here. Again, Bitcoin has to get above this all-important 32,000. We're green on the radar, but this head and shoulders did play out down to this zone. So where are we now? We're just kind of forming this Bart Simpson pattern. If you guys are familiar with the Bart Simpson pattern, and generally that resolves to the downside, by the way. Let me see here. If we do we want to do the Bart Simpson? Why not? We have a little bit of time. So let's see. I got to find Bart in my settings here, and let's find this for you. So we got there and over here. So there's the Bart Simpson. This type of pattern, it looks like Bart Simpson's hair. Okay, so Typically that resolves to the downside and basically down around near support, could come down to 27,000, maybe down a little lower. But these would be excellent buying opportunities and places to dollar cost average. Once you see it, you can't unsee it. Is that right, folks? So anyway, if you like the content, go ahead and like the video and subscribe to the channel. It's the first time seeing it here. And if you guys if you'd like to learn more about these indicators, you can go to cryptomastery.on about more about that. And these are the indicators here. Actually, it's moonstream.io/success is the other one. And we'll give you guys those links here and down in the comments. But at any rate, if you guys have any questions, please put that down in the comments below. We'll watch and see. Not much happening in the markets, as I said. Just it's kind of a waiting game. We have to wait and see how this plays out. Again, the big news is, though, we want to watch for is what happens here on this monthly candle. If this could continue to come down, it does look bearish on the monthly time frame. If we do get a rally in the next week or so, next 10 days, it's the 21st today. The next 10 days, if we can break above 32K, I think it's a quick push higher up into those 48K, 50K range, just based on the Fibonacci's from the top down to the bottom. You can see that there, right in that 48, 49,000, 50,000 golden pocket range. So let me open that up so you guys can see this. So anything's possible here, but at this point, does look like a little bit of pullback, maybe sideways action going into September. And then we could see that other push higher, although it's still, it's certainly possible we could have another pullback down into this 25,300. Remember how important that price level was to retest that. So just don't have a clear indication here, but I do think we head higher into the end of the year. And of course, the halving, April 2024, it's coming one way or the other. So that's a good time to be dollar cost averaging into these positions and things that you like to hold long term. So anyway, that's all I have for you guys. Again, if you liked the video, hit like and subscribe to the channel, and we'll talk to you guys next time. Bye, everyone.